Hello, people. How are you all? I hope you're doing good. Indeed, I'm doing great that way. So, in the midst of the entire uncertainty, November 2020 examinations did happen, not in the month of November though, but it still happened. So, that's a good sign going forward. I hope the upcoming examinations in the month of Jan, Feb, whatever is scheduled, will happen absolutely perfectly, and the May and the examinations to continue after that. And you might be remembering me for the answers discussion that I did for the last year's November paper. I was waiting eagerly to do it for the May paper, but the examination didn't happen only. So today here I am trying to discuss the November 2020 CA Foundation examination paper discussion. It wouldn't just be a discussion where I'll show the answers which are pre-done. I'm going to see the question paper along with you for the first time now. I didn't see it all this while. So let's see the question paper and then try and answer every damn question, and also keep in mind the amount of time that we're taking to do that. Yes. So without wasting much time, come on, let's get started. So here I go. Let me share the screen with you people. So I'm going to the browser from where I will download the question paper. ici.org. You would have to go to the students portal and BOS knowledge portal from there. Then new scheme of education, foundation, principles and practice of accounting. Do we have question papers? Yes, question paper column. November 2020. Yes, this is the one. Yeah, there we have. The question paper is right here in front of all of us. So you might have seen this before. I heard a few reviews from people on the day of examination. Students were telling, sir, bills of exchange question was wrong and few other stuff. So let's see it. Yeah. So let's get started. The code is FYZ. And to be precise, when this exam happened, oh, I can't edit it. Let me save this and then open it. Then I might have an option to edit it. Okay, this is an embedded file. I am not allowed to do any corrections. I would have to crack open this file before I can actually do it. Sorry, yeah, I'm not allowed to. Fine, that's not an issue at all. So let's get started. So these are paper. The code is FYZ. This code helps us understand that the question paper that we got is in correct lines with the question paper that is issued by the institute. This seal, what you see here, foundation, new syllabus, paper one, principles and practice of accounting. Yeah, that is being printed just before uploading this question paper into the website. Initially, this seal would not be there in the question paper that is seen by the students when they are in hand. If you already written your examination, you might have observed this seal never existed. So you wouldn't even be able to tell whether it is accounts paper or not if you're not technically sound enough with the knowledge. You get that? So as usual, question number one is compulsory. Candidates are also required to answer any four questions from the remaining five. So 20 marks each. If the exam is for 100 marks, would have to do 20 into 5, but they'll give 20 into 6 questions, out of which one question is your choice. And it was so told to me that there was an internal choice also. Usually the internal choice does exist, but in the last question, this time it was there in one of the middle questions wherein there was an internal choice between average due date question and an account current question. Yeah, that's what I heard. Let's see it. Yeah. So let's see. The first one, true or false, as usual. Let us start writing the answers in an Excel sheet. New Excel. Blank. Perfect. So this would be the Excel sheet where I would write in all the answers, and I would basically post this Excel sheet in the link to this video in the description. You guys can get that from there. So CA November 2020. We're doing question number 1A. So question number 1A. So question number 1 is state with reasons whether the following statements are true or false. So let's start. The first one, in the case of admission of a partner in a partnership firm, the profit or loss on revaluation account is transferred to all the partners in the new profit sharing ratio. So that is where the trick lies. They've used the word new profit sharing ratio here. So that's not correct. You cannot be using new profit sharing ratio to basically share the profits. The profits are to be shared in the old profit sharing ratio because revaluation arises on increase or decrease in the value of assets and liabilities, and this increase or decrease is something that should belong to the old partners. You get that? So revaluation profits or revaluation losses should be shared to old partners in old profit sharing ratio. So it's wrongly mentioned. Let me correct that. So we were doing I. Yeah, it is false. Why? The answer is so because what is a revaluation profit is to be shared among old partners in OPSR. Yeah, it is to be shared between them in old profit sharing ratio, not in new profit sharing ratio. Let us go to the second one. Second one goes like in the balance sheet of X Limited, preliminary expenses amounted to rupees 5 lakhs. Okay, preliminary expenses is expenses incurred in the process of incorporation. We can call it incorporation expenses. We can call it preliminary expenses. In the process of setting up the entire organization, there are certain expenses incurred. Maybe for the purpose of incorporation, maybe in the preparation of AOA, maybe in the preparation of MOA or other legal deeds. Yeah, all the expenses before the company is incorporated. Okay, under the old provisions, under the old Companies Act, that is Companies Act 1956, such preliminary expenses was written in the balance sheet as miscellaneous expenditure. However, according to Companies Act 2013, the balance sheet format is given under Schedule 3. Old Act, Schedule 6 was there and there was revised Schedule 6. All of you would straight away read Schedule 3. That is the format given under Companies Act 2013. Under the new format of balance sheet that is given under Schedule 3, there is no amount, there is no space called as miscellaneous expenditure on the asset side. Any expenditure incurred for incorporation or by way of preliminary expenses should be completely written off, should be completely written off in the first year of incorporation. So very first year you would have to write it off. How do we write it off? You should write it off against the reserves and surplus. You might ask, sir, what if reserves and surplus is insufficient? It is okay. If reserves and surplus are insufficient, then reserves and surplus will be negative. But preliminary expenses or incorporation expenses incurred should be written off in the very first year of incorporation. You get that? What and all can we use? General reserve, reserves and surplus, say other than CRR or other than any specified reserves like investment allowance reserve or workman compensation fund, anything else can be used. You get that? Yeah. Okay. Let's see. What have they told? So such preliminary expenses was 5 lakhs. Okay. And security premium was 35 lakhs. What is security premium? Whenever the shares are issued at a price higher than their nominal value, such increased price is called as security premium. A share of nominal value 10 is issued at 12. 2 rupees collected over and above nominal value is premium. Such premium is 35 lakhs. Okay. The accountant can use the balance in security premium to write off preliminary expenses. The fact is true. Yes, you can use the balance in security premium account. You can use the balance in security premium account to write off preliminary expenses. Section 52 of Companies Act 2013 gives these powers. In fact, Section 52 of Companies Act says that you can use security premium. Section 52 talks about purpose for which security premium can be used. It says that security premium can be used for the purpose of issue of bonus shares, for the purpose of buyback, for the purpose of issue of debentures at discount, or for the purpose of redemption of preference shares or debentures at premium, and obviously writing of preliminary expenses. Let us check this. I told you 5 things. Let us quickly check this. What did I tell? Section 52 of Companies Act 2013. Yeah. Section 50. Oh shit. Section 52. Did I type 55? Yeah. Yeah. Application of premium received on issue of shares. What are the purpose for which it can be used? A, B, C, D, and there's one more E. What is A? Towards issue of unissued shares of the members of the company as bonus shares. I mentioned it. Second one, write off preliminary expenses. That's asked in the question. And then commission paid or discount allowed on issue of shares. Then premium payable on redemption or preference shares. And then last one is buyback. Fifth, E1, E should be buyback. Let us see. What is E, E, E? See, E is buyback. Purchase of its own shares or other securities. Yep. So we rightly finished that part. So section 52 says it can be used and the accountant has used it. So the answer is true. Yes, section 52. Which act? Obviously, Companies Act 2013 allows use of security premium, write off preliminary expenses. Perfect. We're done with the second one also. Come on, let us now do the third one. What is with respect to third one? Third one, insurance claim received on account of plant and machinery completely damaged by fire is a capital receipt. Yes, insurance claim received against plant and machinery which is damaged is like selling the plant and machinery to the insurance company. It is like that. So sale of asset and insurance claim on that is basically a capital receipt. So the answer is perfectly fine. True. True. Yes. Okay. Money received against transfer of capital asset is what? Capital receipt. Yeah. So you can, the language of the reasoning can be little different also. There is no particularity that it has to be the same language, same is, but, and, the, for should be there. No such condition. IC is little kind in that matter. Yeah. Let us go to fourth one. Purchase of office furniture and fixtures of rupees 2500. So in your office, you bought some sofa, chair, table for the clients to sit and all this purpose has been debited to general expense. General expense is an indirect expense which would go to P&L account. Whereas when you buy furniture fixtures, it is an asset which would go to balance sheet asset side. And from there, you go on depreciating it every year. What have they done here? They've, instead of writing it in furnitures and fixtures, they've written it in general expenses. Have they omitted recording? No, no, no. They've recorded it. But instead of recording it in furnitures and fixtures, they've wrongly recorded it in general expenses. So they say that it is an error of omission. Is it an error of omission? No. It would have been error of omission if they wouldn't have recorded it. Here it has been recorded, but it has been recorded wrongly. Yes. So what exactly is this error? This is an error of principle. Why? You might say, sir, this is error of commission because wrong name is used. Yeah, instead of writing furnitures and fixtures, if they write plant and machinery, it is error of commission. Instead of writing Ram account, if you write Sham account, it is error of commission. Instead of writing a capital item, you wrote a revenue item. An asset is treated as expense. Such a case is a clear case of principal error. You get that? So this is an principal error. False. Yeah, it is what error? Error of principle. I don't know how many of you in your examination might have written the spelling wrong. It is PLE, not PAL. PAL is the person who sits in your college. Huh? PLE is the person who sits here in the answer. So principal, not principal. Yeah. So that's with respect to fourth one. Rectification of errors. Chapter 2, Unit 8, if you remember. Next, we are doing fifth one. A Limited is sending goods costing rupees 50,000 to B Limited on consignment basis. Very good. The accountant of A Limited is of the opinion that these goods should be sent under a sale invoice. Whenever the goods are sent on consignment basis, I repeat, whenever goods are sent on a consignment basis, there is mere transfer of possession. There is mere transfer of possession, no transfer of ownership. When the ownership is transferred, it is a sale. We raise an invoice. When only the possession is transferred, it is not a sale. It is only transfer of possession. Consignee is not our customer. Consignee is our agent. Consignee will sell the goods on my behalf. So I will prepare a document which looks like invoice, but it is not invoice. I repeat. If I sell the goods, I will give invoice. If I don't sell the goods, but send it on consignment, it is like sale, but not sale. In the sale, there is transfer of ownership and possession. In consignment transfer, there is only transfer of possession. In the sale, it is seller, buyer. In the consignment, it is consignor, consignee. So to my consignee, to whom I have not transferred the ownership, but I have only transferred the possession, I will create a document which is like an invoice, but actually not an invoice. So what is it? It has the format, it has the pro forma of an invoice, but not an invoice. So such a document which is sent along with the goods on consignment is called as pro forma invoice. What is it? Pro forma invoice. But what have they mentioned in the question here? The accountant of A Limited, Papa, is not as smart as you people. Yeah, maybe he might have flunked CA foundation, or he might have skipped consignment chapter. So what has he done? He's telling that we should send a sale invoice. Is he true or is he correct? No, false. He is wrong. Yeah, what is it? On consignment, pro forma. Pro forma means format. Pro forma invoice is to be sent along with. This looks like invoice, but it is not invoice. On sales, we prepare sales account. But when the goods are sold on consignment by consignee, we will not prepare sales account. He'll prepare something which will look like sales account, but it is not sales account. It is called as account sales. Why does the consignee prepare account sales and not sales account? Because to consignee, it is actually not sales. To consignee, it is actually not sales. You get that? So that's with respect to fifth one. Come on, let us see sixth one. V. It's that V one. Yeah. I think that's the last one when it comes to true or false. 6 questions, 2 each, 12 marks. And it's followed by 2 4 markers, 20 marks. Perfect. Okay. A concern proposes to discontinue its business from December 2020. So if an organization is thinking of discontinuing its operations from December 2020, meaning anytime soon now, we don't know when is it. So technically, they are not following going concern concept. What are they not following? Going concern concept. So going concern concept is the basis for preparation of balance sheet. Going concern concept is the basis for identification of items at cost. And going concern concept is the fundamental accounting assumption. You get that? So that going concern concept is not there in this organization. Remember that, and let's read the question further. Okay. And it decides to dispose of all its plants within a period of 3 months. So basically it's closing, meaning shutting down and then going. Okay. So what would it do? It would sell all its plants, meaning assets, in the next 3 months. Perfect. Let them do it. The balance sheet as on 31st of December 2020. Okay. After 31st of December, within the next 3 months, they're trying to sell. So there are no more assets. The capital revenue distinction comes when capital items or assets are to be used for longer than 12 months. And inventory is to be disposed of in 12 months. Am I right? Here, there is nothing like current asset and non-current asset. Why? Everything will be sold in 3 months, right? You get that? So that is the case that they have right now. Okay. On 31st of December 2020 should continue to indicate the plant at its historical cost. This is where they are wrong. When do we go with historical cost concept? When there is going concern concept. When there is no going concern concept, entire assets, whether current assets or non-current assets, whether fixed assets or non-fixed assets, everything should be measured at net realizable value. I repeat, whenever there is going concern concept, Fixed assets or non-current assets will be measured at historical cost. You get that? And current assets at cost or NRV, whichever is less. Example, inventory. However, when you come to a case where there is no going concern concept has been gone, then what happens? In such a scenario, all the assets, whether current or non-current, fixed assets or current assets, everything should not be valued at historical cost. It should be valued at net realizable value. You get that? So that's what they're wrong. So the answer is false here. Yes, when the organization is no more means died, no more a going concern. All assets are to be measured at NRV. What do you mean by NRV? Okay, net realizable value, NRV. That's how you basically measure them. So by this we're done with question number 1, which is 6. Very easy, 12 marks pocketed. Done. And come on, let us go to question number 1B. What services can a chartered accountant provide to society? These are this question is something which is little unusual. Why? See, you might say, sir, I'm going to become a chartered accountant. What services will I offer? How is it unusual? It is something very usual. Yes, but if you basically see a mainstream class, in the mainstream class, this question might not be covered in your class. You get that? That's pretty obvious. But if you remember the very first class, what I did, what I took for CA Foundation class and everything, I would tell why a chartered accountant or what does a chartered accountant do. Yeah. So that's where the answer lies. You get that? So when you go down to become chartered accountant one day, what exactly is it that you will do to the society, or what exactly do you provide to society? Such a thing is question here. Very generic one. Yeah. It's not a book bounded answer. Very open ended one. So now you tell me, chartered accountant. The name says question 1B, right? Question 1. So you become a chartered accountant. You become an accountant. So basically, you give accounting services. So the first thing that I basically see is you can give accounting services. Sorry. A business. You see, now I want to start a company. I want to start a partnership firm. I don't know how to start. So I'll go to a CA and ask, sir, I want to start a company. I want to start a partnership firm. I want to start a bank. How do I start? So a chartered accountant will help an organization from the time it's born till the time it dies. Yes. Even if it has to be born, you need a CSL. Even if it has to be killed and then buried, RIP, still you need a chartered accountant cell. So incorporation, setting up, starting a business, there you need him. And in that process, there might be a lot of legal compliances. Yeah, legal services, like which office to go, where to take permission. Now if you have to set up an office in Bangalore, you would have to take permission from BBMP, that is basically under Shops and Establishment Act. And you would have to take certain registrations like from Provident Fund Organization, PF, and then ESA registration you would have to get done. And then you would have to get a PAN card done for your business and income tax registration. And then you would have to register for TAN if you want to do TDS. Yeah. And yeah, a lot of, and if you're collecting any GST, you would have to go for GST registration. All these legal services are to be given by an account, are to be given by a chartered accountant. Done. Okay, fine. Your organization is set up, all the legal compliances are done. You start operations. So then you have to do accounting. So you don't know how to do accounting. So you can hire a chartered accountant and then take accounting services from them. Yeah, you can employ a chartered accountant full time and then you can give them accounting. So basically, chartered accountants will work full time in a lot of companies, helping them as to how it is to be accounted. Or if the organization is small, they don't want to employ a full time chartered accountant. They can't afford to pay 12 lakh, 15 lakh, 18 lakhs. So then what do they do? In such a case, they can take consultancy services. When you come to consultancy services as a chartered accountant, you can give a great bucket of consultancy services. You can give them consulting in accounting. You can give them consulting in budgeting, how to do budgeting for their business organization. Yeah, budgeting, you can give them services. You can give them what is a consultation during with regard to finances, how to maintain the finances of the organization. And then you can give them consulting on costing. Yeah, very important one. You can give them consulting on taxes. Yeah, and when you say taxes, includes both direct and indirect. You can give with respect to direct and indirect. What is direct tax? Like income tax. Indirect tax like GST or any other central excise duty, which is basically now not there. Yeah, but GST and all, custom duty and all, you can give consultancy services based on that. As to you can business organization can consult a chartered accountant, and a chartered accountant can tell how to handle such cases with regard to GST, how to charge GST, how to collect GST money, when to pay, how to pay, what returns to file, when to file GSTR1, when to file GSTR3, when to file GSTR2, how to, what exactly is GST TDS, or when to file GST TDS returns. Yeah, all those services. Come on. And even in fact, I was pretty held up till 31st with a lot of other work regarding income tax due date, GST due date, and everything. And there is an extension provided by our government, and I found some time today, and here we are doing this. So if you wanted me to do this yesterday, it would have been highly impossible, because a lot of services regarding income tax and then GST is something that we provide in our form to a lot of clients as a part of consultancy services, and we were completely held up. Yeah, come on, let's go to the next one. So other than this, what else do we give? Chartered accountant is very famously known as auditor. So we give a lot of audit services. Okay, auditor nahi, audit services. Audit services. What audit services will a chartered accountant give? He can give internal audit services. Chartered accountant, you can give internal audit services, or you can give statutory audit services. What is internal audit services? Internal audit services is where you do audit, and the scope of the audit is decided between you and the management. Whatever the management requires, you do it based on that. You get that? So it is not mandatory. It is not like decided by the statute. But what is statutory audit? Statutory audit is audit which is governed by the statute. That is an act, or that is a law or legislation or government basically. For instance, tax audit that we do. Yeah, 44 ABSs is what we call them. So tax audit is done under Income Tax Act 1961. So Income Tax Act 1961 has a specified form called as Form 3CB, Form 3CD. One of them is certificate and the other one is audit report. So they've given certain points which as a chartered accountant, I'm supposed to look into in my client's business. And when I sign, I basically sign saying that these points are checked, and I certify that these are true and correct. So that is tax audit report. Tax audit report due date was also till yesterday, 31st of December. Now we've thankfully got extension till 15th Feb, and yeah, 15th Jan, and then return can be filed by 15th Feb. So that's a sigh of relief. And you can do statutory audit under Companies Act 2013 also. So Companies Act will tell what are the things that you need to take care. This is the CARO report that you should do. This is the independent auditors report that you should do. Yeah, such an item should be addressed. So that is statutory audit. So internal audit, scope decided by management and the auditor. Statutory audit, scope decided by the statute. Under statutory audit, there can be what? Tax audit, then company audit, and there can be, if you have an organization which is a cooperative society, under the Cooperative Societies Act, there might be a different kind of an audit that's required. And under this tax audit, it can be 44 AB audit, that is income tax audit. Under GST also, there is a different kind of audit required, GST audit, that can be there. Under customs, there is a different kind of audit required, that is customs audit. So tax audit also, there can be multiple types. Yeah, I'm not going to tell you in detail. So basically, this is a 4 marker. Yeah, you can just write these 5 points and then write them little in detail, and you would get your points. Not to forget, point number 6, I told you, no, a chartered accountant is required from the time an organization is born till the time an organization dies. So in the process of liquidation, closure, or arbitration. Arbitration is settlement outside the court. or if you want to do something called as valuation, there also chartered accountant will be helpful. Now, when you want to start an organization, you need a chartered accountant. When you want to close an organization, liquidate it, or close it, dissolve it, or what do you say, arbitrary, like there is a lot of cases and you want to set it outside the court, or you want to value your firm because Ambani is buying your business. So you want to sell it. When you want to sell, you don't need to know the price. So in case your firm is going to be acquired or merged or taken over, there also you need a chartered accountant. You get that? So these are the kind of services what a chartered accountant gives to clients or to the nation in large. So that's 1B. Let us now go to 1C. 1C is the following are some transactions of Messrs. Kamal and Sons. Kamal reminds me of Kamal Hassan. Okay, let us not talk about something that's not related to this topic. Let's get back. Following transactions of Messrs. Kamal and Sons for their year ended 31st of March 2020, you are required to make out their sales book. So they basically want us to prepare sales book. Yes, if you are part of the class that I took, we solved quite a lot of problems on preparation of sales book. Yeah, important point to be noted whenever you're doing sales book has items which are credit in nature and which are relating to goods. Two important points. Number one, it should be credit sale. It should be credit sale of goods. If it is cash sale, it will not come in sales book. If it is credit sale but of assets, again it will not come in sales book. So in order to ensure that an item is entered in sales book, we'd have to check two things. Number one, is it a credit sale? It should be yes. Number two, is it related to goods? It should be yes. So if it is not a credit sale or if it is not related to goods, it would not come in sales book. Very important point. So we're doing it in the books of Messrs. Kamal and Sons. So let me write here in the books of Messrs. Kamal and Sons. So we're doing it for Messrs. Kamal and Sons. So what are we doing? Sales book. For the year ended 31st of March, 31st of March 2020. 31st of March 2020. Perfect. What will be our format? We'll have date column, then we'll have particulars column. Particulars column, we basically will write the name of the party. We'll have invoice number. When we sell, we raise an invoice. Yeah, invoice number. Then we'll have ledger folio. What is the page number of the ledger, that is sales book, where we've entered this particular transaction. Then we'll have our amount column. If the transactions are huge, you can have two amount columns. I'm going to say if there is any calculations. If not, you can be content with one amount column. Ledger folio column, you can keep it super small because there wouldn't be much of items. Invoice number also, you can keep it super small because the transactions would actually not have much. Invoice number might not be given only in the questions. Yes, so that is the format. Yes, I hope this makes it look good enough for you to see. Yeah, okay, come on. So the first one, sold goods to Messrs. Ashok and Mukesh on credit. You sold goods to Ashok and Mukesh on credit. We're assuming that Messrs. Kamal and Sons are dealers in shirts and trousers, the way they've told. Yes, I'll write here. What is the date of the transaction? Date is not mentioned. Date not mentioned. If they would have mentioned in the question, I would have written. So not mentioned will make it big. I'll put a dash. Okay. Messrs. Ashok and Mukesh. Messrs. Ashok and Mukesh, whatever they've given, even I put. It is on credit. Very important. That is the reason this transaction is coming in here. If it was a cash transaction, it wouldn't have come in sales book. How much? 40 shirts at rupees 900 each. I'll write here 40. Okay, so what would be the amount here? It would be 40 multiplied by 900. That is 36,000. Yes, I hope it makes sense. Come on, let us go ahead. Next, what else did they buy? 30 trousers, which you are not sure if I'm wearing or not because you only see till here. Okay, 30 trousers at rupees 1000 per trouser. So 30 trousers. Rupees 1000 each. How much would that come to? Pretty obviously 30,000. I would still do it. 30 into 1000, 30,000. So this is the total purchase. Perfect. What else? Trade discount 10%. So trade discount, is it on shirts or is it on trousers? Yeah, it's on both. Yeah, first I would find the total. How much would my total be? 66,000. On this, I would deduct my trade discount. Less trade discount of how much? Trade discount is 10%. I will do is equal to 66,000 multiplied by 0.1. 0.1, that is 10%. That comes to 6,600. So if I deduct 6,600, what would I get? Is equal to 66,000 minus 6,600. 59,400 is the sale value. Perfect. So the next transaction. Sold furniture to Messrs XYZ. Okay. Messrs XYZ. What did you sell? Furniture. What did you write here? Shirts and trousers. So I'm assuming that Kamal and Sons are basically selling what? Shirts and trousers. If they sell furniture, is it goods? It is not goods. The moment we decide that Messer Kamal and Sons are dealers in garments, that is shirts and trousers, sale of furniture would not come in sales. Sir, what if it is credit sale? It doesn't matter whether it is credit sale or cash sale, because an item, to find an entry into sales book, it has to satisfy two conditions. Condition number one, it has to be credit. Condition number two, it has to be goods. This is not goods, so it will not come in our sales book. So Messrs XYZ, sale of furniture will not be entered in sales book. Should we write this in the exam? Not necessary. Let us go to third transaction. Sold 15 shirts to Aman. This would come. Why? Because it is shirts. But continue reading. For cash. Because it is cash transaction, it would not come. Yeah. Shirts sold to Aman will not be entered in sales book, as it is cash transaction. So this is a lottery question. Seriously, see, only one transaction that you need to write. Yeah, we in the class have done complicated ones, guys. Yeah, I'm not kidding. We have done complicated ones. We have done ones which have we have done ones with GST and all computation in it. But this is so simple. GST calculation, the ones with calculation with regard to package charges. This one that way is very easy one. I'm putting lines so that it looks nice to you. Let me put, what do you say, comma. Yes, this is how you present your answer in the examination. This note is not required to be written in the exam. If you write it, it's okay. If you don't write it, it's even okay. Not at all an issue. So 1C is done. 1C is done. So basically 12 plus 4 plus 4, 20 marks is done. 20 marks is done. So let us now do the next one. Shall we? Question number 2A. Have a reading of the question. I'll just take a small sip of water. Then let's get going. Hmm. 2A. Yeah. Mahesh's cash book showed a bank overdraft of 98,700. The moment you read this fact about cash book, the question can be either on preparation of cash book or preparation of bank reconciliation statement. Let us see. They've given total checks, total cash, total checks, bank charges, bank interest. Yeah. Reading this, okay, bank interest and everything, you would understand it is BRS question. So later they've told prepare bank reconciliation statement as on 31st of March 2020. Yeah, perfect. Come on, let us do this. So it's a question on preparation of BRS. For whom? Mahesh's cash book. Question number 2A. Question number 2A. In the books of Mahesh. I can actually copy paste this format and then make few changes. But that's fine. Let me redo it. What are we doing? Bank. This is prepared as on a specific date. As on what date? As on 31st of March 2020. Let's do this. All we have to do, we'll have two columns. One is particulars and we'll have two amount columns. That's it. That's all we need. Yeah. So what is our starting point? Let's have a look. Our starting point is bank balance as per cash book, if I'm not wrong. Yeah. Mahesh's cash book. They've given cash book balance. This might bother you little that it is bank overdraft. I don't know how have you people read this particular topic of BRS. A lot of them, what I've seen is what they do is they have a specific format or they have a specific way of solving this BRS. The moment is overdraft, entire scene, पूरा वक्त बदल जाता है, पूरा दुनिया बदल जाता है. They change the entire way of doing. They say whatever is add is less because it is overdraft. Whatever is less is add because it is overdraft. Don't try to change the entire concept. Only one thing is different. What is it? Instead of having a positive balance, we're starting with a negative balance. Instead of changing the entire add to less, less to add, simple. That opening balance is negative, write it negative. Overdraft means what? You have withdrawn the money, what you don't have. So opening balance is negative. So write balance as per cash book minus 98,700. What people do is instead of writing balance as per cash book minus 98,700, they write overdraft balance 98,700. So that minus item is written as plus. So all the add items, what they usually add, they'll make it less. All the less items, they'll make it add. Don't try to change the entire concept. This is nice to teach for a faculty, an additional concept to teach. But when you see yourself in the examination, there's already a lot of added pressure. And in the midst of that, you don't have to pressurize this brain more by teaching it something new. Less things to be worried about will make it less of worry and more of peace of mind. You get that? And if you want to see as to how do I do BRS, I have done a separate video on how to prepare BRS, and two videos are available on YouTube. So what I would do is I would drop the link of how to solve BRS chapter, that BRS video, whatever I posted. I'll post the link of it in the description. You guys can find it and then watch it. Yeah. If not, you can just find Accountsman or CA Rajavardhan by YouTube search. You'll still find my channel. Yes, come on. Let's get going. Let's do this part now. So what is it? Opening balance is bank overdraft as per cash book 98,700. Oh, no, no, no. Balance as per cash book. Balance per cash book. How much is it? 98,700. I'll write minus 98,700. Ouch, it's 98,700. It's 98,700. Okay, perfect. So 98,700 has been written, whatever is there. So the first line is done. So let us go see each of the item. Now you just don't even think that it is overdraft. Just remember bank balances per cash book 98,700 minus that will automatically be taken care. So now onwards we'll have few add items and we would also have few less items. Am I right? Would have few add items, would have few less items. After we add those and then subtract those, we'll ultimately arrive at what? Balance as per passbook. That I'll enter at the end. Come on, let's see each of it. Number one, out of the total checks of rupees 8,900 issued. These are checks issued, meaning you opened your checkbook, you wrote your name, sorry, you wrote the person's name, amount, date, you put your autograph, tore the check, and then gave it to them. So these are the checks that you have issued. These checks will reduce your bank balance. Perfect. Issued on 27th of March, that is 4 days before the year end. One check of 7,400 was presented for payment on 4th April. So you gave the check to someone, 7,400 rupees. That person to whom you gave check, that guy presented it to the bank on 4th of April. So you gave the check to him in this month, that is March, in this year. He presented it to bank on 4th of April, that is next year. So you gave it to him this year, he presented next year. When you gave that check 7,400 this year, your bank balance as per cash book has reduced. This is C, this is P. P for passbook, C for cash book. When you issue a check, your bank balance as per cash book will reduce. When the check is presented, bank balance as per passbook will reduce. What has happened? A check is issued. So 7,400, your cash book reduced. Whereas the check is not presented for payment during this year. You presented it next year. If you presented it next year, that means you didn't present it this year. So in this year, your passbook balance is not reduced. Are C and P matching? No. I call it, you cannot see the P. Can you see the P? You cannot see the P. In order to see the P, either you would have to bring the P down or C up. What is in your control? C. Why? We're starting with cash book. So what will we do? We add. What do? We add. So when a check is issued, cash book came down. It is not presented. Passbook didn't come down. So where are we making changes? Cash book. What do? Add. So this 7,400 is to be added. 7,400 is to be added. So shall I write it here? Add May item number 1. Checks issued but not presented. How much? 7,400. Next, and other check of rupees 1,500 handed over to the customer was returned by him, and in lieu of that, a new check of the same amount was issued to him on 1st of April. You had given the check to customer. Customer told, sir, this check number is not nice. Or, sir, on this check number, 2 drops of water has fallen. Some problem, some technical issue, or the name is wrong, or this is crossed, or some problem. He returned the check to us, and we gave him a new check. But he returned to us and we gave him a new check on 1st of April. So what is happening right now is rupees 1,500. I issued a check. When I issued the check, I would have written the journal entry to bank account 1,500. I've written. So my bank balance as per cash book has reduced by 1,500. But the customer has not presented because he returned the check to us. So check has been issued, cash book reduced. Check is not presented, passbook didn't reduce. Can you see the P? No. In order to see the P, either you would have to bring the P down or you would have to take the C up. Either you would have to C up or you'd have to P down. What's in your control? You can't bring the P down. You can only C up. Why? Because cash book is what's in your control. Cash book is our starting point. What do? Add. Add how much? 1,500. So exactly similar to the previous first one. What is it? Same thing. Same thing. How much? 1,500. Am I right? Yeah, we're done with the first one. Shall we now go to the second one? We'll now go to the second one. Out of total cash and checks, of rupees 6,800 deposited in the bank. These are the checks given by someone else to us. Someone else has given us the checks. We have deposited these checks in the bank. When we deposit these checks in the bank, our bank balance will increase. You get that? So total checks of rupees and cash of rupees 6,800 deposited in the bank on 24th of March. Yeah, 7 days before or 1 week before our year end. One check of rupees 2,600 was cleared on 3rd April. 2,600 rupees worth check. When was it cleared? 3rd April. Now 6,800 we deposited in bank. So our cash book balance increased by 6,800. Passbook will increase when the check is cleared. But 2,600 rupees worth check, what happened? It got cleared in the next month. That apparently next month is next year. So when we deposited that 2,600 rupees worth check, our bank balance as per cash book increased. But when did it increase in passbook? In the passbook, it increased only in April. So in the March, it is not increased. Checks deposited, but not cleared. Checks deposited 2,600, but it is not cleared 2,600. So can you see the P? No. In order to see the P, either you would have to P up or you have to C down. What's in a control? C. What will you do? C down, meaning less. How much? 2,600. So I'll write here, it's a less item. Checks deposited but not cleared. How much? 2,600. 2,600. Perfect. So what else is happening? Other than this, there's one more thing. And the other check of rupees 500 was returned dishonored by the bank on 4th of April. Dishonored means what? Honored means like giving maryada. Dishonored means removing mana maryada. Like you basically deposited a check in the bank. Banker will take that check to the related bank and receive the money. That other bank told, there's no money. Share, go. They sent back. What will the bank do? Throw the check back on your face. When you deposit the check, cash book increases. When it gets cleared, passbook increases. If it doesn't get cleared, the banker will give the check back and it will never increase our passbook balance. So check has been deposited, cash book increased. It has been dishonored. So passbook will never increase. Bank will throw the check back on your face. So C has increased, P has not. Can you see the P? No. In order to see the P, either you'd have to P up or you'd have to C down. What's in a control? C. What do you do? C down. So it is less. How much? 500. So I'll write here checks deposited, returned, dishonored. How much? 500. Sir, but the checks that was deposited 6,800. Remaining checks are cleared. Remaining cash is deposited. No problem. The problem is only with 2,600 and 500. You deal only with 2,600 and 500. Perfect. Come on. Let us go to the next one. Next one is bank charges. Okay. Bank charges 35 rupees and bank interest 2,860. Here, very important, it is overdraft. So this 2,860 is charged by the bank. Usually bank interest is paid by the bank to us. Here, as it is overdraft, it is paid by us to the bank. Sir, can there be a case where bank pays us interest? Yes, but they would have to tell that banker has credited interest or banker has given us interest. They would have to tell. Here, the language is also very clear. It says charged. So banker has charged us interest. Will the banker come to us, say knock on our door and then say, hey buddy, you have an account with me. Can I deduct 35 rupees bank charges and 2,860 interest from your account? Banker will never ask that. Banker will straight away deduct the money from our bank balance. We should keep us aware of this and then write the journal entry. Let us see what has happened. Is appearing in the passbook and not entered in cash book. So banker has straight away deducted the money from my bank balance, 35 and 2,860. I have not entered in cash book. So when I have not entered in cash book balance is remaining stagnant. When it is deducted from the passbook balance reduced by 35 and further reduced by 2,860. So passbook has gone down, cash book has not. Passbook has reduced, cash book has not. Can you see the P? No. In order to see the P, are they in the same line? No, they are not meeting. See, one is high, one is low. In order to see them, what you should do? Either we'd have to increase the P, take the P up, or bring the C down. What's in our control? C. What we should do? Reduce. Reduce the cash book balance. By how much? 35 and 2,860. So it's a less item. I'll write it here. 3. Not recorded in cash book. Then there's one more. What is it? Not recorded in cash book. You would have to deduct these two items. How much is it? 135 ಇನ್ನೊಂದು 2,860. So 35 rupees and 2,860 rupees. Yes, I hope it's clear. Let's go to the fourth one. A check deposited in his another account of rupees 1,550 wrongly credited to this account. So I have two accounts. I have two accounts with this bank. I deposited my money. I deposited a check in another account, not this account, another account. Banker by mistake gave credit to this account. So by mistake, banker has given us credit, and by mistake, banker has increased our passbook balance. By mistake, passbook balance has been increased. Cash book mein there is no entry. Can you see the P? No. In order to see the P, either I'd have to C up or I'd have to P down. What's in your control? C. Why? We're starting with cash. What will we do? Increase it. You get that? So add item. Add item. It is add item. Number 4. Wrong credit given in passbook. How much is the amount? Wrong credit given in passbook amount comes to 1,550. 1,550. Perfect. Let us go to next one. Fifth one. A check of rupees 800 drawn on this account was wrongly debited in another account. So from this account, I withdrew 800 rupees. Banker has to deduct from this account. Banker deducted from another account. When the banker deducted from another account, it means that he didn't deduct from this account. So in this account, what did I do? I have reduced 800. I have reduced 800. Banker didn't reduce. Banker didn't reduce. It reduced from another account, meaning it didn't reduce from this account. So cash book may have reduced 800. Passbook may has not reduced. Cash book may have reduced 800. Passbook may has not reduced. Can you see the P? No. In order to see the P, either you'd have to C up or you'd have to P down. What's in your control? C. What will we do? C up. By how much? 800. By how much? 800. So 800, what would I do? Add. Yeah, wrongly debited in another account. Yes. Fifth one. Wrong debit. Passbook. Okay, amount not debited in passbook. Debit omitted in passbook. Yeah, it was omitted in passbook, so we'll do it now. How much is it? 800, isn't it? Perfect. Then let's go to sixth one. A debit of rupees 3,500 appearing in the bank statement for an unpaid check returned for being out of date had been redated and deposited at the bank again on 5th April 2020. Okay, so there is debit of 3,500 appearing in the bank statement for an unpaid check returned for being out of date. Okay, had been redated and deposited the bank again on 5th of April. So 5th of April, we redeposited it and the money is cleared in the bank on 5th of April. So there's one check that we gave to the bank. Bank told this out of date check, sir. Basically, now we have a check is valid for 3 months. After, if the check date, whatever is written and the date on which I submit, if the difference is more than 3 months, the check is invalid. I would have to issue another check. So I gave one check to bank. When I gave that check to bank, my cash book balance increased. Passbook, it has to increase. Passbook, me, it didn't increase. Why? Banker told this is an out of date check and he returned it to me. Okay, I took the check back and I gave it to someone. and I received another check and I deposited back into the bank. By this, we had finished the month of March and we went to April. So in the cash book, the balance increased in March. In the passbook, I had to issue a new check and it got cleared in 5th of April. So in the month of March, balance has increased in cash book, but not in passbook. I repeat, I deposited a check March. So cash book increased. Passbook didn't increase. Passbook didn't increase. Why? They told this check is out of date. So I issued another check. That other check I issued in April. By that month was over. So cash book has increased, passbook has not. Where are we making changes? Cash book. What am I supposed to do? Reduce it. Less. How much? 3,500. Yeah, 3,500 less. $3,500. Check deposited, returned by bank as out of date and re-deposited in next year. You might say, why next year? March is this year. April is next year. Sir, are you kidding? Not at all. Are you sure, sir? Pakka. How sure are you? As sure as I am in about Rohit Sharma playing the next test match. Yeah, that's it. Anything else there? Sixth one done. So we have, oh my God, we have two more. Seventh one, bank allowed interest on allowed interest. So banker is giving interest. When the banker is giving interest, what happens? Passbook balance will increase 1,000. Cash book mein entry is not made. Passbook mein entry is made for interest. Interest is given by the banker. 1,000 rupees it increased. Cash book mein entry is not made. Can you see the P? No. In order to see the P, either you'd have to C up or you'd have to P down. What's in your control? C. What will you do? C up. What will you do? C up. Meaning what? Add. Add how much? 1,000. Add 1,000. Seventh one. Just load by the bank. 1,000. Perfect. Come on. Let us go to eighth one. A customer who received a cash discount of 4% on his account of rupees 1 lakh paid by check. So here is a customer who's supposed to who received a cash discount on his account. Okay, customer, our customer, you should pay us money. So we told him, boss, you pay right now, I'll give you 4% discount. So how much was he supposed to pay? 1 lakh. So when he's writing a check, he'll write for 1 lakh minus 4%. 4% of 1 lakh comes to 4,000. So 4,000 he'll subtract, 96,000 ke liye he'll give check. And I have to write it in my cash book with the bank and discount column. What will I write? On the receipt side or on the debit side or on the left side, I will write 2 and write that person's name. And I'll write in the bank column 96,000, discount column 4,000. I repeat, my customer who's supposed to give me 1 lakh rupees is paying me now, and I like him, I love him, I admire him, I want to have long-standing relationships with him. So I give him 4% discount. So out of 1 lakh that he is supposed to pay me, he will deduct 4%, that is 4,000, and he'll write a check for 96,000. When I receive the check for 96,000 in my cash book with bank and discount column, that is 3-column cash book, on the debit side or on the left side or what you call as receipt side, I would have to write 2, that customer's name, 2 customer. In the bank column, I would have to write 96,000. In the discount column, I would have to write 4,000. Perfect. Let's see what has happened. The cashier erroneously entered the gross amount. Gross is 1 lakh. Net is 96. Gross minus discount is net. Gross money, what the customer should pay me is 1 lakh. Discount of 4,000. What he pays me is 96,000. So the cashier erroneously entered the gross amount in the bank column of cash book. You are supposed to enter 96,000 in bank column. Why? The check that you received is 96,000. But what did you write? Instead of writing 96,000, you wrote 1 lakh. So what has happened? In the place of 96,000, you wrote 1 lakh. So cash book balance increased by 4,000. Passbook, has it increased? No. Cash book, you're supposed to enter 96. You by mistake wrote 1 lakh. Cash book balance increased by 4,000. Passbook balance has not gone up. Yeah. Can you see the P? No, you cannot see the P. In order to see the P, either you'd have to see down or you'd have to P up. What's in your control? C. What will you do? Reduce. By how much? 4,000. How did you get 4,000? 1 lakh into 4%. Yes, it is less. 8. Discount allowed wrongly written in bank column. How much? 4,000. Discount allowed wrongly written in bank column. Yep, 4,000. Perfect. That's it. How did I get this? This is basically 1 lakh multiplied by 4%. You do it in your calculator, you will get the same answer. So we're done with 8 points. That's it. We are all good and all set now. Come on, let us do this. Totaling is equal to sum 12,250. How about here? Is equal to sum 13,495. This is less and this is add. So I would write here is equal to sum is there. No, there only I'll put minus sum. So that is 13,495 less. Now here I'll write bank balance as per passbook. This will be is equal to sum of this entire thing. See, this is less, that is less. It would obviously become minus minus plus. If not, usually what people do is that 98,700 they write plus, 13,495 will be add, 12,250 will be less. I'm telling you, at the end of the day, it will be the same, guys. There is no difference. So balance as per passbook is 99,945 minus. That is overdraft of 99,945. You guys get that? Now let me quickly do a little bit of bordering for this so that it will look good to you people. Yeah. So this is with regard to our question on bank reconciliation statement. That is question number 2A. Come on, let us now go to the next question. So next question is question number 2B. So 2A is 10 marker. We just solved a 10 marker question BRS. Now we're doing 2B. 2B, which is also a 10 marker question. 2B. Question number 2B. This also will look similar to our BRS because this is a question on inventory. How did I make out? The moment they told physical verification, I made it out very easy. So these are again reconciliation problem, stock reconciliation problem. They would give you stock as on one date and you would have to find the stock as on another date. Yeah. So this has few memories for the fact that last year, March, we were supposed to do a lot of stock verifications and a lot of work was piled up. So we had planned stock verification for a lot of our clients. By mid-March, we had planned, like, okay, fine, this article with this principal, this partner will go here, this article will go here. We hired few external people also for stock verification for few of our clients, which are placed in Bombay and Kolkata. But ultimately, what turned out is like the lockdown happened from March 15th, and In fact, till date, we're in 1st of January, like 6 months, 9 months have passed by. We couldn't do the stock verification of our clients' warehouses in the last year. We couldn't. And in fact, the reports are also being prepared. We just told like the stock verification couldn't be executed because of these issues. And we're going by the management representation that is given by the management. And we're giving a qualified report saying that this is not checked by us, so we cannot be held responsible for the same. So that's how it is. Let's see how things will fall into place for this year. I hope it should happen smooth this year. And yeah, this year already things are going pretty good. Yeah, let's see. So the physical verification of stock in a business was done on 23rd February. Okay. The value of the stock was 28 lakh. Fine. The following transactions took place between 23rd and 29th. So this is little different in comparison to the usual questions that we do, wherein they would give us the dates somewhere in March and ask us to compute the stock as on 31st March. But here in this question, I've not read the last line. I take it from the data that's we read so far that they want us to compute the inventory as on 29th February. So let's see. Yeah, determine the value of stock as on 29th February. Assume that you are preparing financial statements on 29th of February 2020. In your balance sheet, how much of stock should you show? That is the question. Let us do it. Yeah. So this is a question for, they've not given the name of the business. So we would write in the books of dash. If they would give the name of the person, we would write that name of such organization in this context here. Yeah. So what do we do? Statement showing computation of inventory as on 29th February 2020. So that is what we're doing. That statement is our objective. Yes. Okay. So what will it have? It will have the same things, particulars. It will have two amount columns. The format will look very similar to the format of bank reconciliation statement. Yeah, what have they given to us in the question? Stock as on physical stock. As on 23rd February 2020. 2020. Which is the physical stock is on 23rd February 2020. 28 lakh. Let us put 28 lakh here. 28 lakh. Yeah. And to this, we would do a little bit of additions. Few items will be added. And we're also going to deduct few items. I'll put a less symbol here. Less, we'll deduct few items. And after we add those and then subtract those, ultimately what we are going to arrive at will be stock as on 29th of February 2020. Stock as on 29th of February 2020. That's our final output. That's our end answer. Perfect. Let us start. What do we have? Number one, these transactions, this 1, 2, 3, 4. Okay, only 4 adjustments. Nice. These 4 adjustments, what I'm going to read, has happened between 23rd and 29th. So for those 6 days, what transactions have happened is given here. This basically suffices or sums up our practical scenario, wherein now assume we have a lot of clients and we can't visit every client's place on 31st of March and then take the inventory. What do we do? Few clients we do before 31st March, few clients we do on 31st, few clients we do after 31st. So if you have done before 31st, after 31st of March till the date, whatever the transactions have happened, we'll add or less to arrive at the balance. If you've done on 31st of March, very good. If you've done after 31st of March, whatever the transactions have happened after 31st and before the date on which we did the audit, we'll add or less those items. So we'll remove those items to see the impact. That is what we're trying to do in this case also. Yeah, let us start. Out of the goods sent on consignment, goods at cost worth 2,30,000 were unsold. So after 23rd February, I have sent 2,30,000 worth goods on consignment. Sorry, out of the goods sent on consignment. Yeah, goods were sent on consignment and these were unsold. So if they are not sold, those belong to me and they are part of my inventory I'm supposed to add them back. You get that? So the physical inventory it was not included. 2,30,000 worth goods. It was not there with me because they were already sent on consignment. It is not like it is sent between 23rd and 29th. These goods were sent on consignment before 23rd of February. So on 23rd of February, when I took the physical stock, the 28 lakh is there. No, in the 28 lakh, this 2,30,000 is not included. Why? The physical possession of these goods is with the consignee and not with me. Yeah. But on 29th February, these goods are not sold and they're left unsold. They're left unsold. Do I have the possession? No. These goods are with my consignee, but consignee doesn't have the ownership. I have the ownership. These are the goods which belong to me but are lying with a third party. So this inventory, though I don't have physical possession, it still belongs to me. I have to show it in my closing stock. I would have to add it back. Get that? So add is the solution for this particular item. Let us go for it. One. Goods sent on consignment meaning unsold with consignee. How much is it? This is to the extent of 2,30,000. I'll put it in the inner column. 2,30,000. It is not sufficient. I can do two things. One, I can pull it to, instead of pulling, I can wrap text. I think pull it would suffice. Not an issue. Let us go to next one. Purchase of rupees 3 lakh were made, out of which goods worth 1,20,000 were delivered. Okay. And delivered on 5th of March 2020. Now, there are two ways of seeing this. First one, purchases is 3 lakh. 1,20,000 were delivered on 5th of March. So how much was delivered before? 1,80,000. So you might say, sir, I take only physical inventory into consideration. Or second way, sir, I take into consideration the actual material. Receipt or not received doesn't really matter. I have purchased. You get that? We need to go not by the just actual receipt, not by mere receipt. Have you purchased 3 lakh? Yes. Have you received 3 lakh? Not necessarily. Now the question is, physically how much I have received? 1,80,000. Why? 1,20,000 is received in March. So 3 lakh worth goods have been purchased. 1,80,000 has been received. 1,20,000 will be received in March. What should I include? I should include 1,80,000 which is received, and I should also include 1,20,000 which is received in March, because we are not trying to identify the physical inventory. We are trying to identify the inventory to be shown in balance sheet. You get that? Goods purchased but not received are still part of my closing stock. Goods purchased but not received are also part of my closing stock. You get that? That is the assumption that I'm assuming. However, if you want to write only 1,80,000 in your purchases, you should write goods purchased but not received are not included in the inventory. And the organization takes the stock only when it is received, not when it is purchased. You get that? So in my case, I'm considering this as a purchase completely. Yes, 2. Goods purchased. How much? Purchase is 3 lakh. If you want, I'll write here. Note 1. I'll give a note on this. Is it mandatory to write in the exam? Not necessarily. If you write it, it's okay. If you don't write it, okay. Note 1. Yeah. It is assumed that organization records inventory purchased on purchase basis and not merely on physical delivery of goods. Yeah, they're writing the goods on the date when they purchase and not merely based on the physical delivery. However, if you assume that the goods will be recorded only on the physical receipt of such goods, then I'll write 1,80,000 and 1,20,000 will not be included. Let us go to third one. Sales of rupees 13,60,000. These are the goods that is going out. Okay. Which includes 3,20,000 sent on approval basis. Oh, this is tricky. So what I'll do is, no, this is the last item. This much space is not required actually. Okay. 3 is to be deducted. Actually, sales has to be deducted, but I'll do a proper working note. Cautiously have a look at note. Sales. Okay, boss. How much is the sales? Sales is 13,60,000. This will become tricky if you don't observe. I don't want you to watch this video again and again. I want you to see it just once. Yeah, you might say, sir, you will get more view time. I am here not for view time's sake. I'm here to help you. So I want you to understand it in the very first go. Watch it carefully. If you're watching the video at 2x pace, at this junction, I want you to watch it at into 1 speed, not go to 2x pace, because you might have to end up watching this second time or third time. Yeah, total sales is 13,60,000. Come on, let's go ahead. Include goods worth 3,20,000 sent on approval basis. Okay, so this 13,60,000, I'll basically put it into two categories. Number one, okay, I'll write goods sent on return or approval basis. Sent on approval. Goods sent on approval basis. How much is that? 3,20,000. 3,20,000. This is not sales. What is this? It is not sales. It is not sales. Don't at all worry. It will be sales only when it is accepted. It is sales only when it is accepted. Till then, no deduction. No deduction. Unless confirmed. They should give a confirmation that yes, this is sales. They should give a confirmation. If they don't give confirmation, it is not at all sales. We would not be deducting it. Okay, understood. Okay, let's go to ordinary sale. How much is the ordinary sale? That is balance. Out of 13,60,000, the balance is ordinary sale, normal sale transaction. How much is that? I'll do 13,60,000 minus 3,20,000. That would be 10,40,000. Understood? So far, perfect. So total sales is how much? Total sales is 13,60,000. Out of that, goods sent on return or approval basis 3,20,000. Ordinary sales is 10,40,000. Okay, continue. Half of these goods were returned by 29th February, but no information is available regarding remaining goods. Okay. Out of this 3,20,000, I'll shift this little this side. Yeah. This is there. No, this is not sales. No deduction unless confirmed. I'll put this also little below. Okay. Out of this, now what has happened? Goods sent on return or approval basis is 3,20,000. Out of this, few are returned. And few are there are three possible scenarios. I'll insert one more column here. It can be returned, it can be accepted, it can be put accepted here. You can return it, you can accept it, or it's a case where neither nor accepted. They have neither returned the goods nor have they accepted the goods. Possible or not? Definitely possible. Yes What has happened in this case? Half of these goods were returned before 29th March. Half is how much? 1,60,000 returned. And balance acceptance is 0. So balance 1,60,000 is neither accepted nor returned. Yeah. If it is accepted, then what do we do? Then it is sales. Then deduction. It should be reduced from the stock. Yeah. Here, this returned and neither accepted, it is no sales, not sales. No deduction is allowed. Unless confirmed, no deduction is allowed with respect to these items. Perfect. Did you get this? So if you reduce when the goods are sent, when it is returned, you need to add back. So we'll not do any treatment for these items. So 13,60,000 is my total sales. I hope this is clear so far. I'll put a box to this much. Yes. So how much is the goods sent on approval basis? 3,20,000. 3,20,000. Out of that, how much is returned? 1,60,000. How much is neither returned nor accepted? 1,60,000. How much is accepted? 0. If it is accepted, it is sales and we deduct. If it is not accepted, then what do we do? If it is not accepted or it is returned, then what do we do? It is neither sale nor what to say, it is not a sale. So no deduction will be allowed and it should be done nothing. We should do nothing about this much, 3,20,000 then. If there was something called accepted, then that would have been deducted. So nothing is being sold. So we'll do no deduction with respect to this 3,20,000. So ordinary sale 10,40,000. This is where our business will start. Let us see with respect to this 10,40,000. Let us see what is happening with respect to 10,40,000. If there is no further adjustment, 10,40,000 is to be deducted. Yeah, it is selling price. Would have to adjust the profit and then deduct it. Yeah, let us see what is the case here. Sales were 13,60,000, which includes 3,20,000 sent on approval. Okay, half of these goods 29th February, but no information is available regarding the remaining. Continue. Then, yeah, goods are sold at cost plus 25%. So this is selling price. This is selling price, and from this we have to deduct the profit margin. Balance is to be basically here we'd have to deduct. You get that? But there is further information. However, goods costing 2,40,000 had been sold for 1,50,000. So there are two variants here. In the sales, there are two variants here. There are two variants here. One is sales at profit at goods sold at cost. Okay, goods sold at cost plus 1/5, right? Yeah, cost plus 25%. Certain goods are sold like this. And okay, others. There are certain other goods. So what is this other goods? Other goods may, they've told selling price is 1,50,000. Goods costing 2,40,000 has been sold for 1,50,000. There is basically loss. So how much is this? Selling price is 1,50,000 for certain goods. So what is this amount of goods which is sold at cost of 25%? This is selling price will be equal to 10,40,000 minus 1,50,000. Did you understand? It is like the balance goods. So usually goods are sold at cost plus 25%. Certain goods are sold at an exceptional price. 1,50,000 is the selling price. 2,40,000 is the cost. There is loss. So out of this 10,40,000, some goods are sold at loss. That loss goods selling price is 1,50,000. So what is the balance? Selling price is how much? Is equal to 10,40,000 minus 1,50,000. Selling price is equal to 10,40,000 minus 1,50,000. That comes to 8,90,000. So 8,90,000 is technically what? It is the selling price of these goods. We would have to eliminate the profit. profit from this. Once we eliminate the profit, we'll basically get the cost. What is the profit? They've told profit is cost plus 25%. So it is 25% on cost. When I say 25% on cost, it is 1 by 4 on cost. If it is 1 by 4 on cost, I call it 1 by 5 on sale. Or you can straight away say, I don't know how many of you will understand, it is 20% on sale. Yeah, I'll do a separate video on this if you guys don't understand how this is done. This is very basic. Yeah, if it is 25% on cost, it is 20% on sale. If it is 1 by 4 on cost, it is 1 by 5 on sale. I usually tell this logic. Cost is she's with you. When it is sold, she's no more with you. So you will be over her, but she'll be with someone. You get that? So 1 by 4, 1 is you, 4 is her. When she's sold, you will be over her. 1 will be over 4, but she's with someone. Plus 1, 1 by 5. So that's how I say. When it is sale, you add 1 to the denominator. Yes. So let us now identify the profit. I'll do is equal to 8,90,000 divided by 5. How much would you get? 1,78,000. Now, if I deduct 1,78,000, how much is the cost? Cost of goods sold, that is equal to 8,90,000 minus 1,78,000. That comes to 7,12,000. 7,12,000 is the only sales item. I'm going to say total sales. Here it is so much, and here selling price is 1,50,000. Obviously, I would have to identify the cost of these goods. Cost is given to me, right? How much is cost? Cost of these goods is 2,40,000. 2,40,000. So this is again cost of goods sold. So this is the item that is under discussion now. This is the cost of the goods which is sold. This 1,60,000, it is not sold. This 1,60,000 returned, not sold. Here 10,40,000 is the selling price, of which the cost price comes to 7,12,000 and 2,40,000. So the 7,12,000 and 2,40,000 is the goods that is sold. That is the goods that is going out of the organization. Between which time? Between 23rd February and 29th February. This much has to be deducted. Did you understand? Yeah. If not, then watch this entire part once again. Yes. So now tell me, note number 2, what is the amount of goods sold? That is 7,12,000 plus 2,40,000. Technically comes to how much? It comes to is equal to yes, 9,52,000. Is there anything left in the question? That's it. So we're done with this, guys. Here I'll underline this and then I'll put the sum here. Here I'll put is equal to minus this. There are not too many items for me to do sum here. So straight away, what do we arrive at? Inventory or stock as on 29th February 2020. It will be how much? It is 28 lakh plus 5 lakh 30 minus 9 lakh 52. 23,78,000. This, my friends, is the answer. Yeah, you might feel like you would have to watch this once again. By all means, feel free. If you have any doubts, please drop a message to me. I have dropped my Telegram channel's link in the description as well as my Instagram account's link. You can get in touch with me and then let me know if you have doubt with regard to any point, or if you want me to cover any specific topic in a separate detailed video. Your request will be considered, but you would have to make an effort to let me know about it at first. Little aligning business. Yes, perfect. Yeah, that's it with regard to question number 2B. Now we can go to question number 2C. Or 2C is not there. Straight away question number 3. So we're done 2. What I'll do is I'll end this video here. It's already become long. What I'll do is I'll post a separate video covering question number 3 and 4, one video, and then question number 5 and 6 a separate video. So we'll make it into 3 parts. Yeah. So question number 1 and 2 done. The next video, part 2, that you'll see will be question number 3 and question number 4, 3A, 3B. 3A is basically our consignment. 3B has average due date and account current. Yeah, account current and average due date. We'll do that. There is an internal choice, and there's one more. Bills of exchange also is there. So 3C. Then we'll do fourth one also in that next video. Then I'll do 5 and 6 in a separate video. Yeah, because editing the video and rendering the entire video, it will become really difficult for me if the video is too long. So that's it for now. This is part 1 of our solutions discussion for CA Foundation Principles and Practice of Accounting, November 2020. I'll post part 2 and part 3, and the link to which will be given in the description to the same video. That's it. Have fun. I hope you're having a great time, and that's it. See you all in the next one. Till then, stay in the game. Bye bye.